a tick today. It's kind of interesting that you have these various indices that we usually rely on as indications of what the market is going to do. Now we can't. Interest rates, though, have been on a rise. It's been very troubling to some, but you see some opportunity in interest rates going up, don't you?
Yeah, I think, David, last week when the 10-year Treasury went, from 1.66 in May to almost 3% last week, we actually bought some long-term fixed income, and I think it presented an opportunity. Investors overreacted. They're talking, the 10 years at near 3, it's going to go to 3.5, 4, and I never thought we'd be buying a 30-year as far as GE Capital preferred, but we ended up doing it at a major league discount because investors are emotional and dumping.
Well, Chris, I mean, it's hard not to have some emotion and some concern on a day like today, and you alluded to that a few moments ago, that it was one of those trading days going into a 3-day holiday weekend. How nervous are you going into a 3-day holiday weekend when we really don't know what the news headlines are going to be? The strike is still incredibly possible.
Yeah, as you can still hear, the guys there's probably about 2/3 of what's usually left here on a holiday weekend, and the volume being so light, there's a lot of short covering. And anytime you have that sort of short covering, there may be an opportunity to buy when we open on Tuesdays. But what I really want to see are how those currencies react on those. Remember, just because we have a Labor Day holiday doesn't mean that everyone else does.
Great
and in those
point.
currencies, the yen is really going to indicate. If we see the yen lose strength against that dollar, really it's the yen has been trading in an inverse relationship with the S&P.
Right.
So look to the yen to gauge, the open interest. But I really think it's going to be a selling off kind of September.
And currency
Jim,
markets are going to be
keeping it overseas for a moment, the fact is that a lot of people find opportunity now in what's happened in Europe. They think that Europe might have bottomed out. Is there any bet that you can play there if you believe that's happened?
Well, we definitely think that it's time to go bottom fishing. It doesn't mean that there aren't some canyons still inside of the Eurozone. But certain countries certainly faring a lot better, economies faring better, markets faring better, Germany in particular. We like Fidelity International Growth, a well-diversified fund, actively managed, whose manager knows how to pick stocks not just through a computer screen, but actually travels extensively, boots on the ground, and had lived abroad. So we like this moment for active managers in that space. We wouldn't want to buy the whole market and all of its risks, but there are clearly some rubies in the rubble of Europe, and we think we got the right manager to help us.
By the way,
them.
Fidelity International Growth. We were putting up a lot of different symbols up there, but that's FIGFX, right? FIGFX.
FIGFX.
FIGFX, okay.
All right, Alan, really quick, I do want to ask you before we leave you, again, as we go into this 3-day weekend, the one thing that's going to be different about this 3-day weekend, besides the Middle East issue, is the fact that when you have Europe trading on Monday, there's a lot of tension between the European nations with regards to what's happening overseas. By the time we had comments from the President and the Secretary of State, those markets were closed. What do you think happens Monday morning?
Well, I think it's going to be a situation where, a lot of this is discounted, so it's really not going to be as much of a factor. But what we would do is, if you do see, a sell-off into next week, is use that as a buying opportunity. The profit taking we did last month, use those proceeds and pick up some high-quality bargains. So that's the way I would look at it early next week.
Jim, how do you weigh the risks of this thing spinning out of control? I mean, there is a possibility. You know how crazy the Iranians are, or the Iranian government is anyway. They have a lot of assets all over the world, terror assets. If they put that into play, if they feel threatened by what the U.S. does and put that into play, does that change the ball game?
Overnight and on scale. I mean, the reality is right now, I could say the easy trade is trading the quicksand for the beach sand. But if we see some sort of escalation beyond a singular and surgical strike, if we see Syria, Iran, and others get scratched and then turn to make Israel bleed, this will be a market that will bleed accordingly. That doesn't look like it's going to happen, but certainly it is no longer just a possibility. It's a probability. You have to factor it into your risk-adjusted thinking.
Well, Jim, the Israelis, Jim, they're certainly getting ready. They're very nervous over there right now.
Let's hope we trade the quicksand in for the beach sand. I love that analogy, Jim. Good stuff.
Jim Lowell, Alan Lancz, Chris Gersh, all of you, of course, thank you, Chris. We're going to see you in just a few moments, see how the S&P futures close.